Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FIRSTCASH Holdings INC quarterly report. FIRSTCASH Holdings Inc. operates a diverse range of businesses and services across the United States, Mexico, and Latin America. The company's primary offerings include retail pawn stores that lend money on collateralized personal property merchandise, retailing through collateral forfeitures and over-the-counter purchases, retail POS payment solutions for LTO products, and other financing options. These services cater to cash and credit-constrained consumers, providing them with access to financial assistance and retail merchandise. The significant rise of FIRSTCASH Holdings, Inc. stock price over the past year. FIRSTCASH Holdings, Inc. FCFS, has experienced a remarkable increase in its stock price, with a reported one-year return of 42.25% and a year-to-date return of nearly 50%. Several key news events have contributed to this upward trajectory, including record quarterly earnings, strategic acquisitions, strong demand for pawn loans, analyst upgrades, and consistent dividend payments. FIRSTCASH's ability to consistently surpass analyst expectations with its earnings reports has been a significant driver of the stock price increase. The company's acquisition of H&T Group plc in August marked a major milestone, expanding its global presence to over 33 retail pawn locations and boosting annualized pro forma revenues to nearly $4 billion. Analyst upgrades and price target increases have also played a crucial role, with TD Cowen raising its price target for FIRSTCASH Financial to $172 and Texas Capital Securities initiating coverage with a buy rating. The company's strong financial health and consistent dividend payments have further boosted investor confidence, contributing to the stock reaching new all-time highs. Overall, FIRSTCASH Holdings, Inc.'s combination of strong financial performance, strategic acquisitions, and positive market sentiment has driven its significant stock price increase over the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by increased pawn loans and finance receivables, resulting in a 23% increase in net finance receivables. Strong demand for value-priced merchandise in Latin America, leading to an 8% increase in retail merchandise sales. Higher interest and fees on finance receivables due to increased average balances outstanding. Revenue decline is primarily driven by decreased leased merchandise income, resulting from a 30% decline in leased merchandise income. Lower wholesale scrap jewelry sales in the UK segment, contributing to a 6% decline in revenue. Net income and profit margins experience growth. The company's financial performance has shown a significant improvement in both net income and profit margins. Net income increased by 28% on a quarterly basis and 29% year-over-year, reaching $82,807 and $226,203 respectively. This growth can be attributed to the acquisition of H&T, a leading pawn operator in the UK, which contributed to the increase in net income. Profit margins have also seen an upward trend, with gross margin rising to 50.2%, operating margin increasing to 23.1%, and net profit margin reaching 8.8%. These improvements can be attributed to a combination of factors, including increased revenue or sales, as well as decreased operating expenses, such as the depreciation of leased merchandise. Segment-specific analysis reveals that the U.S. segment experienced significant growth in both net income and profit margins, with a $14.7 million increase in net income and a 1% rise in profit margin to 26%. The Latin America segment also saw an improvement in retail merchandise sales gross profit margin, rising from 35% to 36%. Overall, the company's financial performance has shown a notable improvement, driven by strategic acquisitions and operational efficiencies. The company is indeed generating positive operating cash flow, as evident from multiple pages of the financial summary. The net cash provided by operating activities for 2024 and 2025 are $341,809 and $379,297 respectively, indicating a steady increase in operating cash flow over the years. Additionally, the operating cash flow for the 3 months ended September 30, 2025 is $112,479, further confirming the company's positive operating cash flow. The company's financial health has undergone significant changes over the past year. A notable increase in total debt level is observed, rising by approximately 50% from September 30, 2024 to September 30, 2025. This substantial growth in debt is also reflected in the higher long-term debt balances outstanding in Q3 2025. Furthermore, interest expenses have increased, with a rise of 17% and 10% reported on different pages. The amortization of debt issuance costs has also seen an increase from $2,707 in 2024 to $2,974 in 2025. These changes indicate that the company's financial situation is becoming more burdensome due to increased borrowing and higher interest expenses. The company's financial performance has shown mixed results across various segments and regions. On the positive side, retail finance operations and retail POS payment solutions have performed well, with significant increases in interest and fees on finance receivables, pre-tax operating income, and overall revenue. These segments saw a 33% increase in interest and fees and a 53% increase in pre-tax operating income. In contrast, corporate expenses and taxes, H&T segment, and corporate have underperformed. Administrative expenses increased by 39%, 25%, and 2% respectively, while interest expense rose by 17% and 10%. The H&T segment also incurred incremental administrative expenses due to the acquisition. These poor performances were largely driven by factors such as CFPB litigation settlement, higher average total long-term debt balances outstanding, and depreciation and amortization expenses. Management is projecting a growth-oriented strategy for the company, focusing on expanding its pawn operations through various channels. Key initiatives include expanding existing stores and opening new locations, strategic acquisitions of real estate and pawn stores, prioritizing relationships with customers and retail merchant partners to enhance retail POS payment solutions operations. This approach aims to drive business growth and increase market presence. The company has made several significant transactions in the past year. In terms of acquisitions, the most notable include the purchase of H&T Group plc for £289.1 million, $392.4 million, on August 14, 2025. Additionally, 9 months ended September 30, 2025, saw the acquisition of 6 pawn stores in the U.S. for $35.1 million and real estate at 33 store locations for $44.2 million. On the other hand, the company has also made divestitures, including eliminating relationships with A-Freight and Cons. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, totaling $52.4 million in 2025 and $48.8 million in 2024. Additionally, the company has also engaged in share repurchases, with a total of 755,000 shares bought back at an aggregate cost of $89.6 million. These actions demonstrate the company's commitment to rewarding its shareholders through both cash dividends and capital returns. Concerns about inventory buildup and supply chain disruption. There are concerns regarding inventory buildup in the company's operations. In the U.S., inventories have increased by 12%, while in Latin America, they have surged by a significant 30%. However, the company has a silver lining to mitigate these risks. Its ability to rapidly liquidate gold jewelry inventory, which accounts for 60% of total inventory, provides flexibility to quickly boost cash flow. This cushion may help alleviate concerns about supply chain disruptions and inventory buildup. That concludes the financial summary for FIRSTCASH Holdings INC. Feel free to comment below, and I will be happy to answer them when possible.